Good morning, good afternoon, and good evening, one and all. This is the Smoking Barrel, episode 10 of season 5. I'm your co host, Rustin Edwards, based in the beautiful green, verdant valleys of Switzerland, with my illustrious co host, Mr. Matt Stanley, in wonderful Dubai.
Summer is here. And look, morning, everyone. Look, I'm in a good mood today, which is unusual, but it's Friday morning,
TGIF,
10:40.
baby.
Yeah, exactly. But summer is here in the UAE. It's, what is it now? 42, humid, and it will stay like this until end of October. But that's okay. That's okay. I'm my 14th year now of experiencing these summers, and you never get used to them. But tis what it is. Anyway, back from Singapore, back from London. Good to see a lot of people. Did we record last week? I can't remember. When's the last time we went out? Last
It was
Monday.
actually last week. It actually was
That's
last week.
God, yeah, it's just amazing. So London was good. It was lovely on the Wednesday, 22, and I was sitting on a terrace in the city of London with some very good friends, very nice lunch. And then it was 10 degrees the next day. Stupid country. It was freezing. Anyway, I managed to warm myself up, so that was all right.
That's good. Yeah, no, things have been rocking and rolling. We've got oil markets kind of moving sideways for the month of May. The nice $6 trading range, though, for the month, if you're trading that intra week volatility that's been popping in and around. But
Yeah.
not really anything has changed too much on the price side.
Well, look, I mean, it's been a month of two halves, isn't it? Because the first month, or sorry, first week of the month, we traded down to 58.50. We were between sort of 58.50 and
That
63
was on the
bucks.
back of the OPEC announcement of increasing their return of oil to the market.
That's right. And then since the 12th of April, we've been between, say, $64 a barrel, $63.50 a barrel to 66 and a half. So, in an environment where there is a lot up in the air, whether that's ceasefire talks, peace deals, tariffs, OPEC bringing back oil, demand waning, oil has been
Sanctions.
remarkably resilient. Yeah,
Well, I mean, I think the pricing there is really relevant. I think it's more even relevant on the curve because when you look
yeah,
down the curve, the 12-month time spreads have been vacillating between +2 and flat.
yeah.
And a lot of that, I think, is just how traders put their risk on as they look on the forward curve. So any geopolitical event, risk goes on, but it goes on the time spreads, which rallies the curve, which then also rallies the front end of the curve. And that causes a lot of the price volatility. And then when people deem risk is coming off, the price curve collapses and then flat price comes down. I mean, that's what I think we've seen here in this last week. We've had a high end of the curve on Monday, and here we are going into Friday, and the 12-month spread is basically a slight contango, if not flat.
Yeah, Novdex trading -1 cent in Contango. I still like, and don't write in and sue us, but I still like the set deck, selling set deck Brent. I just think, we heard yesterday there was a rumor that OPEC are going to bring back more oil, another 411,000 barrels a day at the next meeting that will come in July. Um, House view, spoiler perhaps, House view is perhaps maybe they'll bring back more in August as well. If they do, then OPEC are look. It's like we spoke before we came on today. It's it's not any other agenda in our view, or my view especially, apart from that OPEC just want to bring oil back. I just don't want to. They just want to get rid of the cut. And if oil comes back in August as well, they'll be 80% of their way doing that, bringing back that 2.2 million barrels that they did cut a few years. But look, considering that when that headline came out yesterday, just on that same thread about where structured trades, flat price dropped $1 a barrel. I spoke to you yesterday morning when you were getting on the train. I said, "Is there a headline now?" And bosh, there it came. There was a tweet from someone in the know about OPEC has rumored to bring back more oil at the next meeting. Flat price dumped $1. Is that what it's worth? I mean, I would have thought in the environment we're in, prices would have, well, I don't know. I mean, structure came off. And I think that in the next meeting, I think SEP deck really does come off. And I think that's why it's a decent sell. It's worth probably 48 cents right now, SEP deck. So I think that's a decent sell here. But yeah, is that what another million barrels a day of OPEC since the start of the year they bought back is worth about $1 a barrel on a headline.
But I think you got to put that juxtapose that within the framework of the geopolitical risk, because you got to remember earlier in the week we had the headline that Israel's planning to strike Iran nuclear sites if there's no deal with Iran on their enrichment with the United States. So you throw that bit of geopolitical risk, what the potential response would be from Iran if they were attacked by Israel for that factor. Would they shut down the Straits of Hormuz? And if that happens, okay, now you've got a lot of oil that's been captured inside the straits that can't get out.
Yeah.
So therefore, that geopolitical risk is still simmering in the background. That keeps a supportive measure in the market. So is it worth $1? Is it worth $5? Who knows? But if you can't produce, you can't export, it's worth nothing.
Well, look, I mean, this is a good point because I think it's really important to know the amount of headlines that are coming out, Iran, Israel, the US. There's one that came out last night. We have the capability to build a weapon, nuclear weapon, but we do not have the will to do so. Does that mean that on the back of all that drama at the start of the week, that the market corrects itself? Let me ask you this though. If in July, OPEC meet and they look at the first half, they look at the data for the first half of the year in terms of demand, and they decide, I'm not saying they will, this is just, speculation. They said, actually, do you know what? We're a bit worried about demand. So we're going to bring back, we're not going to bring back any more oil. We're actually going to cut 500,000 barrels a day of supply in August. What do you think the market reaction would be? I think it would be a lot more dramatic than dropping $1. I think
I,
it would be a $3, $4, $5 rally.
yeah, I think definitely it would be at least a $5 rally on something like that. Because the case would be that okay, OPEC's not, there's a lot of analysts out there saying that OPEC's looking at a price war. They want to punish the overproducers. They want to shut down shale production. What's the other one out there? They want to get their market share back. That's some of the analytics out there. So if
But
that doesn't hold,
this is why I get pissed off and grumpy like an old man about these kind of articles because
because you're on man.
what did someone who understands tact a lot better than I did say to me this morning? One second, because any regular listener would know I don't do tact very well. The wires are always after the dramatic headline. The problem is that some people still fall for them. I just like useless wankers.
Well, I don't think some people
Why read
fall.
that crap? That's mine.
I think a lot of algorithms fall for. I think some people do fall for. But nevertheless, if OPEC just turns turtle and they decide, okay, instead of cutting, or instead of returning oil, we're going to cut oil. Yeah, you easily get a $5 rally in the market. You get structure roofing back up $3 a barrel. Uh,
That's really important. This because the market seems more fragile to. It seems a lot more accepting of more oil back into a market where demand seems to be okay. I had a really interesting chat when I was in London with someone who said, actually, we see demand increasing in Europe for gasoline. We see demand increasing in the US for gasoline. People are pretty bullish.
I'd
They've
like
got
to know
a
what data. I'd like to know what data they're looking at, because if you look at the EIA data, it doesn't show that.
Well, yeah, no, we're going to get onto the demand argument in a minute because it will be an argument. People like, comment, subscribe. But no, look, he had a barrel, he had skin in the game. Trust me. But it's a very interesting way that people are looking at market, and it's not. I don't think people are being delusional. There was a really interesting article that the head of OPEC wrote. Forgive me. What's his name, Russ? Q80 guy. How gay is it? Anyway, he wrote something that was saying about these missing barrels and sort of having a swipe at the IEA and all this kind of stuff. So there seems to be a
Yeah,
bit more.
but I think that was a lot of let me see, sour grapes on the side of OPEC, because OPEC made much ado about cutting their relationship with the IEA because they didn't like the information the IEA kept putting out. It's like the same thing. If you look at the OPEC data, OPEC analytical data is fairly weak, and it's not reliable. They overestimate because, again, that's the position they're in. They want to overestimate where they're coming from. And so therefore, to go, ha ha, you guys got it wrong. Okay, that's a bit of schoolyard taunting. But nevertheless, demand is still only not it's still not the number that OPEC thinks demand is.
Yeah.
I
Look, I
still tend
can't
to
comment.
believe that we're about 102 million barrels, 103 million barrels a day of overall demand, of which the majority of that demand is not consumer fuels, but it's going into other industrial applications,
Right.
which is that enough demand to maintain the upward trajectory that the likes of OPEC throws out there? My guess is it is not.
No, I
Um,
agree. Yeah, look, I can't comment, and why did I even raise it? I'm so stupid. I'm not allowed to say anything. Um, but look, look, it's an interesting thing. I think just before we get onto the demand equation, I saw an article, a post that marine traffic, which is now owned by Kepler, has been for the last couple of years, put an article out about what yacht demand is doing because this week's Formula One Grand Prix is in Monaco. And
yes, it
apparently,
is.
I'll bring. I'm not sure where the post is, but I saw it yesterday. And it basically a record high number of yachts will be berthed and at anchorage in Monaco for this week's Grand Prix. Now, what does that mean? I mean, look, there's more yachts,
I mean,
right?
that means the tickets in the grandstands are way too high.
Yeah,
The
exactly.
ticket prices are way astronomical.
Why buy a ticket in a grandstand by the swimming pool when you can rent a gym palace for the weekend? But anyway, it's kind of. But look, let's talk about the elephant in the room because I think a lot of people, and I'm going to pull up an article that we wrote this week. I would would people knee jerk? Did people react too quickly about tariff impacts when it came to oil demand, or are people like us, like other data providers as well? Is it right that people react quickly to global dynamics like tariffs and adjust demand forecasts quickly, or is it a flawed methodology? I don't know. I mean, it's obviously we have to react, of course, but did
Well,
people
I think
overreact?
the case with any type of political move like a tariff, I think any analytical firm, the best thing they can always do is say, here's where we're currently at. If this comes to pass fully, here's what we see as the impact would be. But not necessarily say, oh my God, this is now the new demand,
Yeah,
because tariffs are a political action. They can be applied or just like sanctions. Sanctions are a political action. They can be applied and removed as quickly as you want. And so it can be the same thing saying, okay, if you put more sanctions on Russian oil flows, what does that do to world demand? Or what does that do to ships? What does that do to this? What does that do to that?
mm, mm,
So to me, it's always a case that you have a baseline analysis based on status quo, Pax Romana, and then you throw on top of that, okay, we've got this super tariffs being applied to the EU. What does that actually mean for EU oil demand? Does it mean anything really? Because I think there was a lot of um, in the gaze of like China, there was a lot of negative input. Oh my God, China's economy is this is going to happen. Oil demand is going to crash. But markets are resilient. Markets are efficient, and China has been on a downward demand trajectory for consumer fuels for the last year, and
well,
that
a,
continues to
a, a,
move.
a plateauing of demand. They still buy a lot of oil.
They buy a lot of oil, but is that oil being refined or is that oil being stored?
Well, does it matter? I mean,
Well, it
when you're
does
looking
matter
at,
because if you're storing oil, eventually you run out of room.
I know that, but I mean, let's
And so
not go
then you
into that
stop
argument.
buying oil. And
But
this
what?
is the case that, I think China's, about 1.7 billion barrels of oil in storage in China, which is probably getting close to their upward bound of what they have for storage capacity for oil. And so
Yeah,
at some point, they will stop buying oil for storing. But if the refinery runs aren't there because they don't have these consumer fuels being utilized, i.e., roads for trucks, gasoline for cars, jet fuel for planes, fuel for ships, or those demand profiles are lower than everybody estimates because of efficiency gains on all those engines, and the influx of EVs into the truck market as well as to the car market, the LNG ship cars as well, plus the energy transition in maritime with ships burning more LNG than what they have in the past.
yeah.
You end up with a point where you'll store a lot of crude, which shows a lot of buying, but then it just sits there. And it's now going to offset demand in the future.
Yeah, yeah, totally. I just want to show you a chart here. And look, there's lots and lots of speak and, like I go back to my point, reactionary headlines and articles that came out about the impacts of tariffs. And, the one thing that people obviously had a massive eye on here, there was, the atmosphere, I wasn't here, but the environment with the Middle East was in last year when Trump visited was apparently like magnetic, especially in Saudi Arabia. People were, were so happy that he was around. And the one thing that he sort of said was he wants to bring commerce, not chaos. And I just wonder if there is a little bit of him, well, if he's got a little bit in him somewhere, but if there is a kind of him looking back and thinking, actually, I probably overdid it on the tariff talk. And now I want to bring a lot more semblance of order, that I'm in control. I'm not just sort of threatening all these massive trade partners. And I think his visit to the Middle East, which is his first major visit in his second term in office, he really sort of, there was no sort of bullshit talk about delusional trade deals. He signed deals. And like I said, he was after, and he said, I'm after commerce, not chaos. And I think it's really important that people have got to look at that. But I just want to bring up one chart. Let me just share my
Say
screen once.
along those lines, though, I mean, the Trump administration, I don't particularly agree with the shotgun approach on the tariffs. I think tariffs are a good tool to use to get countries to realign their practices and to become better partners in trade. But the whole idea of going after the entire world all at once, I mean, it is, how shall I say, bringing the big stick and showing everybody, I'm willing to do this if you don't come to the table.
Yeah,
And then retreat back once everybody says, oh, crap, he's serious. He's doing this.
yeah,
So, there's a bit of carrot and the stick. And if you look at all the headlines that have come out since the tariffs about countries working to make deals, the EU is trying to make a deal with the United States, China and the US have had discussions now. It seems like more things have some trade will come back or trade will move back. But there's a lot of things that do need to be addressed in the entire trade framework because it is, are you doing something for your country or are you doing something for your own gravitas?
yeah. I mean, look, I just want to show you this. This is look, I mean, I'm going back 2 years here. This is exports of crude and condensate from the US to China. Okay. So, I mean, look, this is the impact when you see flows of oil where people are not going to sell to China. Now, it's not a seasonal thing. If we look at, let's go,
Well,
where's the,
there's a definite trend line there.
well, okay, but it's not trending down to zero.
No, but it has been trending down from the highs.
Right, we were 480,000 barrels a day in September. Now, this is a 2 year chart. I can go to all data here. I mean, look, where are we here? May 2020. I mean, we all know what happened there, 1.3
Which
million barrels
COVID.
a day.
But,
Yeah,
but that's
exactly.
because China is a price taker.
Right, exactly, exactly.
Discounted, they bought all they could.
Yeah, exactly. But you can see really from 2020, okay, what's the 3 month moving average? 107,000 barrels a day in 2021. That varies, 517 here. But let's just go back to what it's like for the last 18 months, let's say. So March, zero. April, zero. May, well, we've got 100,000 barrels a day coming back. I'd need to check that. That might be vessels that are on the way and are just signaling China. They might be going to Singapore or somewhere else. But you can see, I mean, okay, August we went down to 24,000 barrels a day. But that September arrival, that would have been when we're getting into maintenance season in China, right? So that would be seasonality. But March and April, for the first time in how long? Let's have a look. Okay, December 2019. Here, 5 years, 5.5 years, the first time that China have not been buying US oil. Market dynamics, maybe. Where is WTI trading versus Dubai? Maybe. What kind of crude are they buying? Medium sour. We know that. That's why the Iraqis and the Saudis want to sell to them so much. But it's it's really going to be key to see if China do start coming back and buying US oil. If that to me is the first bellwether for actually what is happening with
Oh,
tariffs.
but I don't think Chinese have any incentive to buy U.S. oil because U.S. oil is more expensive than other oils they get on the market. I mean, if you look at their full imports, they're importing far more Russian, Iranian than U.S. U.S. is just I would say, a trimming factor more than anything else against the heavy sours that they're getting from both U.S., USSR, Soviet Union. My God, oh, there's a brain fart from Russia and from Iran.
Yeah, no, you're right. I mean, look, if we go, this just gives you an idea of the split just quickly. Um, Bearing in mind, we only capture the top 10 countries. The rest of them will be split into others. So if you look at, you can see this all right. Let's have a look at April. So in April, China bought 10 million barrels a day of crude and condensate. Biggest supplier was Russia, 1.4 million barrels. Well, others down here at 1.9, but that will be every other country that's supplied to China. And then we've got Iraq, 1.1 million, Saudi, just over a million. Iraq and Saudi really competing for market share there. Brazil, a million barrels a day. Omani, Iran, and the UAE, you can see. So the others will be made up of the US and Nigeria and whoever it may be.
We'll see what have you. I mean,
Yeah,
but the chart right there shows you that the U.S. has not been a big part of their diet.
yeah,
It's a small percentage of their total diet. And so I don't think it has any impact whatsoever on the trade. I think China's more interested in the LPG and the LNG from the US than it is
yeah,
for the crude oil.
yeah,
Because I think that's where that's what they really want, and that's what they really need.
yeah.
And so that's where I think the trade policy has an impact. Other than that, I think it's as they need to and as they see value in buying that bit of crude from the U.S.
Yeah, I mean, look, I'm just putting up LNG. Uh, Let me just share this with you again. I'm giving away spoilers here. If anyone wants to dive any deeper, feel free to get in touch with our salespeople at Kepler. Right, look, let's talk about let's go back here. Let's go NOV 2023. So two million barrels a day of LNG. Obviously, that's not the right unit to run this metric by, but you can see far and away how much China buy from Aussie and Qatar. Over 50% really comes from those two countries. But you're right, the US are up there. What, fourth biggest supplier, as well as Malaysia. So yeah, look, I think there's a lot more to play. There's a lot more at play here, and I think I'm just trying to think of sort of signals that are going to give away. I mean, we've got that there is going to be still some LNG and some oil that the US are going to supply, but the US have really dropped off in the amount of LNG they're going to supply now. I mean, 40,000 barrels a day we've got in April versus 900,000 barrels a day that Qatar and Aussie combined are selling to China. So I don't know. The data
I
doesn't
mean,
lie,
but if you do get a backlash on the whole trade discussion with China, and China no longer imports any LNG from the United States, all it does is displace LNG from the U.S. into Europe and backtracks anything that's coming from the Middle East and Europe back into China. So
yeah.
you just rebalance trade flows, you rebalance your shipping market.
Well, while we're on now, I just wanted to talk about. We spoke about this a couple of weeks ago, maybe last week actually. Was about the sort of preemptive measure that Indonesia took, right? Which was to talk about diversifying their crude slate away from. We can buy from other people. I think I pulled up a Bloomberg article about it.
Mhm.
We can buy from other people. We'll buy from the AG, from West Coast India, from the US, and not just buy from Singapore, wherever it may be. And this week we saw, let me pull up that article actually. I don't want to talk
They
about.
put a tender out for product, excluding Singapore as a point of origin.
Yeah, but not Malaysia.
Well, but Malaysia is a different country.
Yeah, I know, but Tanjung Palapas is in Malaysia.
Right, different
And I
country,
can, when
different
I was in,
country,
when I was in Singapore, I could see Tanjung Palapas out of my hotel
different
window.
country. You can see Indonesia from Singapore as well.
Yeah, I know, but I mean, I'm not boxing. It's not box. It's not like a dotted line. Look, this my colleague who wrote this. I think it was Zamir. Yeah, he wrote this article. Let me just bring it up because it's very good. There's lots of screen sharing today. Just stealing other people's work, people. That's what we do here. That's what I do anyway. Indonesia's clean break. Why quitting Singaporean barrels is easier said than done. There you go. Um, Indonesia. Look, you can see here Singapore's market share of Indonesian clean imports by origin country. Look, where are we here? I mean, hovering between really 50, I'd say the average is around 50% of Indonesia's clean barrels are coming from Singapore. Yeah, 55% of 440,000 barrels a day of clean product imports. And this is cross barrel, gasoline, gas oil, jet fuel, kerosene, everything that is that they need. They have a fairly well established refining network system in Indonesia, but it's a growing economy and it's a busy and there's lots of people there
Well,
and they
and the
need more oil.
Indonesia is also made up of a bunch of islands, and so with
Yeah.
that diverse demand profile around the country, your local refinery might be able great supplying the island of Java per se, but if you want to go to Sumatra, okay, you're going to have to bring stuff in to supply that island from a third party location, which makes better economic sense than taking supply from your own refining system.
Yeah. Yeah.
Back in my halcyon days of sailing, I mean, we used to transport gas oil from Kuwait into Indonesia and supply the power stations there.
Right.
Uh, so it's not a new idea that they were doing. They've done it in the past. It's just a
Yeah.
matter that at this point, there's a lot of other things in the works that they're working on and pushing them outside of what their current buying patterns are to new buying patterns.
Yeah. Look, I think it's one to watch, and I think we were always when we spoke about what Indonesia this like I said this preemptive measure to diversify the slate on where they're buying from, not to be complacently reliant on places like Singapore, even though it is the trading hub and the most cost efficient way for them to buy oil. There's more at play here, and I think that was it's a really good case study, and we said it was one to watch. I wonder if others will follow within that region. People like, the Thais rely heavily on Singapore. Anyone within that region does, because like I said, it's the most cost efficient way to buy finished grade goods for import into Southeast Asia.
Well,
So I just wonder if others will follow suit.
But Singapore has a huge refining hub. And with that huge refining hub, it's easy to distribute the excess product that those refineries produce to other places in the region via MRs and other smaller handy-sized tankers. So it creates that economics of scale where, okay, that major refining hub in the middle of the archipelago there, transporting oil up and down to the peninsulas and back and around, is far more cost effective than running in the refineries in Thailand in some cases and trying to transport from those refineries back to where they need to go.
So are you bullish? Are you bearish Singapore cracks then?
Um, when I say I'm bearish, I mean if Indonesia's not there to take, that does put some downward pressure on refining margins.
Yeah, but I mean, it's the East-West trade, isn't it? Because if they've got to bring it in from the AG, from Red Sea, from Europe, then you'd be bullish European cracks,
But I,
and
I
what
would
do you
be
do with
hard. I
East-West?
would be hard pressed to say that the economics work to bring a cargo of gasoline from Europe into Indonesia. I would think that the economics are probably far more sufficient from an Indian refinery, maybe a Reliance, to
Mm.
bring gasoline or gas oil into Indonesia, just like from the Middle East refineries into Indonesia versus anywhere else. Even Chinese refinery, Chinese exports into Indonesia.
Okay, so this is where
Um,
we get into the old argument because AG prices are a net back from Singapore, even though Singapore you'd be bearish cracks, because the AG number is a net back from Singapore, you can't be bearish because you're going to fundamentally push down the
you have
very thing you're
demand
going to
from a
produce.
refinery and you're losing 400,000 barrels a day of offtake from a region, that's fairly bearish refinery runs.
As a Singaporean refiner,
Yes.
absolutely. As an Indian refiner, you want your price of your product to be as high as possible. But when the net back on the AG number is a net back from Singapore, how
Yeah,
can you be bearish?
but then that's just freight. And if you look at the freight triangulation, the freight's the freight. I mean, that's your expense. Is that you're basically looking at what it's going to do to MR freight in order to make that net back. So, are you going to see Asian cracks rally massively? No, they'll come up. They won't come up that much more. You'll just redirect flows
But you buy
from exports
TC5.
to the Med, exports back into Singapore. And
But,
honestly, if you take all the costs that you look going into the Med from a Middle East refinery to the Med area, where you have to deal with the ECA zone, now you have to deal with the EUA cost and the fuel EU cost. There might be a better advantage to go to Indonesia versus exporting into the Mediterranean.
so we buy TC5 then.
So you can buy TC5 as you like.
Okay. Enough about trade ideas that are going to get us sued and put in jail. What have we got coming up in
We're
the
not
week?
here to give investment advice or trade advice. We are purely giving opinions on this show.
Just here for ranting. But pretty quiet next week. Monday, start of driving season.
Yeah,
Memorial
started
Day.
driving season, which is not off to a great start in the United States. Gasoline demand still below 2019 levels in the United States. So all those traders pinning their hopes on Memorial Day, good luck to you. God bless. Usually by Tuesday, when you get the initial reads on the retail sales, and if they're not above 9.5 million a day for gasoline on average for the weekend, then it's not going to be a good gasoline season. And I think
Yeah.
that's something that the world needs to keep their eyes on. When you look at demand overall in the United States, the interesting thing on the demand profile is the other oils category in demand has been showing a lot more demand. That's like your asphalts, your lube oils, your generator oils, and things like that. They don't qualify as normal consumer fuel. They've been actually been supporting the overall demand number, where the actual retail consumption fuels has been dropping. Um, but again, we'll see what happens over Memorial Day weekend.
Yeah.
You get the usual chatter about, oh my God, it looks like it's going to be a huge driving season. Well, it all comes back to the numbers.
It does. And look, the UK are off as well. So I hope everyone has a nice long weekend. And you're off next Thursday, Friday. It'll be a pretty thin week next week. But, markets, even though we're in a $1.50 volatile range, just don't take your eyes off the screen, I think, is the counsel.
Well, it's a very headline-driven market, and especially when you've got the OPEC meeting coming up over next weekend,
Yeah.
on top of all the other stuff going on. You have today the fifth round of talks between the United States and Iran kicking off. We'll see how those come out over the weekend. I don't think there's much expectation for any surprise announcements.
Yeah.
However, the Trump administration has said that they have put a proposal on the table. Then we'll see what the actual outcome is. I mean, I know that they're rambling around the refining of uranium, enrichment of uranium is the big
Yeah.
question mark.
Yeah.
But I think there's probably going to come down to some compromise number that will work and achieve the ultimate goal of getting things back on side and potentially getting Iran back into the marketplace as a full
Yeah.
function player. And if that happens, then you'll start seeing, that should put further downward pressure on crude oil markets and also probably take the heat off the high sulfur fuel market.
Yeah. Yeah,
Because as
which
you
has
said,
been
with the
good.
heat in the Middle East, high sulfur fuel has been relatively a strong animal.
Yeah.
And it probably will continue to be so as long as temperatures are hovering around the 45-degree mark.
Which they are, trust me. Anyway, look, good to see you. 6408 on Brent. We'll probably be here next week. We'll have a chat next week, and yeah, look, enjoy your weekend. Anyone celebrate? Anyone lucky enough to have the day off, have a lovely long weekend.
Yes, enjoy your barbecues in the U.S.
Yeah,
Put another burger on the burner, and enjoy your bank holiday weekend. And we'll catch you all on the flip side.
yeah. Ciao.